Interesting divergence. So we had the markets going up, we had banks going down, we had gold and silver going up, silver especially. The miners went up too. The dollar went down. So let's get straight into it. Yeah, let's get straight into it. So the S&P, look, hammer, decent day, not the craziest days. Yesterday we had a nice gap up, close a higher day, so continuation was expected. I didn't know what to expect. I thought we'll have a bit of a move up, but maybe we'll close red. So we moved up a little bit, 0.5%, not the worst. Still okay for the bulls. Next resistance for the S&P is 407 for me. You can see this trend line, even though it's not straight, so that's pretty clear. Nasdaq, more bullish, so same thing, up 1% after yesterday's gap up, closed with a hammer above trend line, new high, bullish stuff, not gonna lie, bullish stuff. So next trend line, before I say it's this one all the way up here, I would say, look, why don't you try and get into this area here, this sort of, I'm not going to call it a gap because it's not really a gap, but this level here, for me, it's a mini level, a pit stop on your way to 332. So let's call it 321.8. Why not? Because, a lot of times you get this sort of market, I'm not going to say breakout, but it's a fake out. So, and knowing what we know, that fundamentally the markets are in a horrible shape, despite the Fed doing their little mini QE bailout. Okay, I understand a bit of a move up, they think that it's behind us. So I don't think it is. I mean, if the banking stocks were down, they just didn't take down the market today. So, but the Nasdaq has always been a little separated from the rest of the indices when it comes to the banking effect. So look, respect the charts, forget the news, respect the charts. We could go higher, we should go higher. But I'm just going to say this resistance is the first one to take out, because I just think the market is looking for an excuse to go back down again, especially other indices like the Russell, which I'll get to now. And again, the banking stocks, we have to take a look at that because that's leading headlines. So, but otherwise, Nasdaq, beautiful. Hammer close above the last couple of highs, above trend line. So that's bullish, can't lie. The Dow Jones closed above its descending. It did also yesterday, so very similar to the SPY. Look at that, very similar. Again, I'm just going to leave this trend line here because I still think the markets have a lot to prove, at least for me. And I think there'll be a bit of resistance even here, 33,000. Call it 33,000, nice round number. So and now I'm extra sure that that will be a bit of a resistance. So those are the resistance points. Just to recap, S&P up here for me. Dow Jones up there for me, very similar. The Nasdaq a little higher up here, and the Russell, look at that. Okay, this is the trend line I put in this morning, yesterday, whatever the last video I did. But look at this, okay, it tags it, you can see why that was a bit of a trend line, these sort of last highs. But, we closed red. We closed reds below yesterday's high. Russell is consistently the weakest one. For me, even if the other markets go up, what's the next resistance? Well, the one it failed to take out today, 178, let's call it. So the Russell, if the banks go down, the Russell's the first one to go down with them. And how can the other markets keep going up if the Russell's going to start going back to old lows and make new lows? So for me, still bearish, always have been. Short term, yeah, short term bearish, medium term and long term, definitely. So I'm watching the Russell, I'm watching the banking stocks, but obviously I'm keeping my eye on these. But that's how I see it. I'm waiting for another move lower. The VIX, I mean, look, fails to rally. At least it did rally a bit today, closing that gap. But look at that. Who wants to trade the VIX? Obviously, if I had to place a trade, I'd be on the long side for sure. But so much manipulation, and a lot of people always blame manipulation when their stock doesn't do what they want it to do. But if I'm ever going to use manipulation, it would be on the VIX. Okay, let's look at the banking ETF. So here you can see similarity with the Russell. Let me just show you the Russell. Look at that. Look how similar the XLF is and the KRE. Well, these are just weaker versions, but okay, XLF, just like the Russell, really sort of touched this resistance, but closed red. For me, this is the senior banking ETF, main ETF, and it will just follow the others, which is the regional bank. And this is the main one. And I said, look, yesterday, look at that little hammer there. We closed within the descending, not outside it like the rest of the indices did. And I said, look, we'll probably go a little higher because we have to, because all the other indices closed at high of day, which is what we saw, a bit of continuation, all except the Russell. But, watch out, the banks could go back down again. And look at this close, closing down here. That's worst close in these 2 days, which means for me, we go lower tomorrow. And if we go lower, we basically are going to test the all-time low. And you know what I mean by all-time low, the low of the bear market, which is just very recently put in. So can we see this kind of a move tomorrow in the regional banks, 3%? Yeah, sure. We did 2% today, and that's the green market. And tomorrow's Friday, so, extra fireworks. I think we do go all the way down here, 42, let's call it, in the KRE, KBE, probably venture down there too, maybe not make the full trip, but yeah, I mean, for me, the KRE will set the tone for tomorrow's markets. If we have this going back down, testing lows, you might see some panic happening towards the lows, and I can't see these being green. So I do think the markets will be red tomorrow. But yeah, banks down for me is the biggest takeaway. But again, you've got to respect the Nasdaq being this strong. That's something. I don't agree with it, but who cares what I think? So that's that. Let's look at the interest rates. Okay, so generally up, if I can say that, but kind of unchanged. Look here, we're getting unchanged the lower out, the further out we go. And then we start to go down a little bit, 10s and 30s. So I'm just going to call it unchanged overall, but I think we're going to go back down again in rates, especially as the banks go back down again. I think that's the sort of trend at the moment. So yeah, I'm looking at KRE going down, the banking ETF, the regional banking ETF, the Russell 2000, IWM going down, and interest rates across the board actually tomorrow. That's what I think. We're topping a little bit here in the definitely in the 1 year, but I think I saw a chart just now. 1 year credit default swaps has just skyrocketed. So something could be up there in the background. So rates sideways overall, but I think we go back down again tomorrow. Let's check out the dollar. Dollar interesting. All right, this is the one where I was saying it could go up or it could go down. Obviously, I wasn't sure, but I said, look, if we go up and we start to test 103.5, watch out, a close above that, we could actually start to run to 105.5. Short covering momentum, all of a sudden becomes the fear trade as it traditionally is. Didn't happen. Goes back down again. Now it's looking ugly. Obviously, this was the other scenario. I was talking about it for reasons for gold to go up, for example, the dollar and the banking stocks. And actually, that's what happened today. The banking stocks went down, the dollar went down. And I mean, we'll get to gold and silver, but let's just say they went up, especially silver. Something else I mentioned, silver was outperforming. Can we get to 24, which we pretty much did? Anyway, getting ahead of myself. So the dollar, testing 102, completely 102 on the spot. Worst close in a long time, right? We had nice tails over here, nice wicks for the hammers. That's why we bounced. Now we're revisiting with a close right near 102. To me, we're going to go to 101. It would be extremely difficult for the dollar now to reverse at 102 again and go back up. You'd have to have like a basically it would have to go through 102, even for it to be bullish, have to go through 102 and then close with a hammer. And then you could say, okay, that was a fake out, and then let's close outside of this descending. So what I mean by that is not that I can draw a candle like that, but what a ridiculous candle, one of these kind of candles, where we close here and then blah blah blah, breakout, close here, and then we run, close there. Not going to happen, by the way. The opposite is going to happen, in my opinion. We're just going to go right down to 101. And that could finally put gold at 2,000, silver at, well, definitely silver above 24, maybe 24.5. But today I'm pretty satisfied with what the DXY did. It's pretty conclusive to me. Obviously, anything can happen. News can, send things in reverse. But I think we go straight to 101 now. So that's the dollar. Actually, let's quickly look at the euro. Yeah, look at that close at a high of, not a high of day, but best close in a while. Basically the opposite to the DXY, which makes sense. It's the biggest part of the DXY. So a run to 110 is possible. Ah, that's interesting. Dollar up against the yen, or the yen just must be doing very terribly, but you'd expect the dollar yen to be going down. But well, that's impressive actually. I didn't expect that. But still, if the DXY is going down despite the dollar strength against the yen, that's how bad the yen's doing, and that's how weak the dollar is against the euro and the pound, basically. So we saw the move up in the euro, the pound. Look at that, close at high of day. Definitely going to test this 124. Well, we're basically there, aren't we? So do we get a close above this zone? That's the question. 124.50, 1.245. Then, well, then I don't know. Then we go to 126 essentially, at least. So basically, the pound strength and the euro strength versus the dollar seems to be the two currencies that are pushing this down. And if there's continuation, which looks like there'll be at least a little bit, DXY should start going back down, or at least venturing to the 101s. And that could be all you need for gold, sorry, to start to test 2000. We're going to get to the dollar. In fact, let's go straight to commodities, starting with the copper. This is what I was looking for, that little coil, and bam, we closed above the descending. So what happens now? Well, we basically go up here, not in one day, but we go up there. That's what should happen. That's the point of candlesticks and charts. It gives you a greater probability of success, let's say. So I think we go up there now. Perfect charting. I would say this is really typical kind of move. So yeah, closed above the descending. The rest is history. Let's see what happens. Natural gas is the opposite. It didn't close above the descending, but it did not close below 2.1, 210, although pretty damn close. I still favor breakout. No, I can't say that anymore. Let's see what happens. I don't care what happens. I've bought, my average is roughly here. Let's say 2.5-ish. I bought here. I bought there-ish, but I bought this other ETF, so I don't even know where exactly. It doesn't matter. I'm basically here on average. It's the same thing. If we go lower, which definitely can happen now, then let's see. Yeah, I mean, I don't need to be too precise here. Just above 150, I would say. We're not going to get to 150. We'll just bounce before that. Maybe 165, 70. Doesn't matter, same thing. But I would let it flush a bit. I don't think it'll flush and rebound straight away. I could do that. Maybe it goes all the way down to 2 and then just comes all the way back up and closes above 210. You could have that little hammer fake flush. Let's see what happens. I think I've covered the scenarios. Yeah, let's see. Let's have a close below 210 before I start getting into that. But yeah, I'm a bit surprised. I would have expected natural gas to have closed above the descending. It's still possible. So let's see what happens. Very fun watching this, especially when you have skin in the game. WTI. This I did not expect. This sort of reversal candle indicated to me a bit of a move back down again. I thought maybe 70, but look at that. Total reversal, close a high up day. Is that following the markets? Is it specific to oil? Don't know. Maybe we are going to go back to the mid-70s. So let's see. Close a high up day. Very bullish, Basically the opposite candle from yesterday. So let's see. I don't really own oil. I own one oil stock, Prospera Energy, which I'm down on actually, but I don't care because I've only bought it twice out of 4 buys, just like natural gas. I welcome a drop. You can check that. There's PEI, I think, Prospera Energy, the Canadian ticker. Okay, so let's see what happens. I think a bit of continuation in oil. Uranium. Oh, no, we didn't want that. But that was definitely part of the scenario. So now we're closing above the descending. So this move down here that I was watching and hoping for a flush of this major ascending support, it held, and now looks like we closed above here. So what happens now? Well, we should test the next descending, but after something like this, and to be honest, it might, you never know how precise or imprecise your chart is. You see here, am I really starting from there? Not exactly. If I just tweak it a little bit, you could say, oh, it hasn't closed above the descending. So when it's this close, you shouldn't consider it as conclusive, you know, like, oh yeah, we definitely closed above the descending. Maybe not. Plus you get the fake out. So now, what would I expect? Honestly, I would expect to move down despite it technically doing what it should do to qualify as going higher. I think it move down, you know, and then move back up. And then let's see, you know, does it start testing prior support? Does that really count? Maybe. I don't know if this really counts, this area here, because a move all the way back to this next descending line is maybe a bit too much. It should stop off on the way, but I'm not sure. It's not the clearest trend lines. I'll leave them in for now, sort of double levels like this. Let's see, but I think it should retrace a bit because it's had a decent bounce here. You know, it's proved itself. Okay, it's not going to go down. We get it, but maybe it's time just to go sideways. And you can see here that, you know, prior resistance over here. It's not the strongest resistance, but, you know, just retrace a little bit, then go back up, and then we'll see what happens. But I expect this next descending here to be very strong resistance. So let's see what happens. But pretty impressed by uranium's resilience there. 4 or 5 days in a row. All right, gold and silver. Now, yesterday I thought, getting weak. That's why I trimmed a little bit more my miners. Totally regretted that, but doesn't matter. That was part of the plan. And I know that I shouldn't, and I didn't sell any more miners today. However, I did say, look, if we close below 1950, because 1950 for me is, let's zoom in a bit more, it would be sort of a close below this candle. And more importantly, definitely breaching this ascending. We didn't do that. We didn't breach the ascending, as you can see. Was it precise? Yes, it was. Yes, it was. We didn't breach it. And then we started to rally higher. So gold did not break this ascending trend line. Therefore, it did not, in my opinion, according to the technicals I follow, it did not warrant a sell, an extra sell, or, you know, all of a sudden becoming short-term bearish. It did just enough to hold on, and then it started to do quite well because you could see it close higher than the last 2-3 days. And now it looks like we're going to have to test the upper end of this. So let's say tomorrow we're here. That would be what? That would be 1990, you know, maybe even higher, maybe 1989. But $10 is nothing when you're at 1980. So if you're going to test 1990, you're probably going to test 2000. But I think 2000 will be strong resistance, unless there's something chaotic happening. So, and again, I think the banks will go lower tomorrow. I think the dollar will go lower tomorrow. And those are the two elements I was looking for gold to do well today. I said, look, it's not over for gold. First of all, it hasn't broken this ascending. But second of all, watch the banks going down, because that's fear that pushes gold up, and watch the dollar going down, because that's ultimately the main barometer for gold going higher. So we had those two, and therefore gold went up. And what did silver do? Silver just went absolutely wild. Started the day very strong. I think it was up 1% when I first looked at it, whilst gold was flat. That told me straight away gold was on a mission. And, you know, I noticed this. I said, look, another thing helping gold out is silver's strength. So basically, everything I pointed out kind of was important today. But look, you know, silver 2.5% is meaningful stuff. Where was the high of day? Like 23.9 something. That's basically $24. So if we have continuation tomorrow in gold, which we should, because of the dollar, because of the banks, and just generally because the technicals of gold warrant a little bit of a push higher, we should get silver with a $24 handle. And who knows, we could even go a little higher, you know, 24.20 or something. But this descending line definitely will be resistance. That should coincide with gold at 2000. So now it kind of makes sense. You know, silver did its catch up. We're going to have gold back at 2000, except this time, well, when gold's at 2000, you're not going to be having silver here in the 23s. You're going to have it in the 24, probably 24.20. So, you know, how much percentage is that? I don't know. This is very rough stuff. I'm not, but, you know, 4% or something. That's good. That's very good relative to gold. So, and remember, look, zoom out, silver, this resistance is strong. So I should take profit there, even though I already sold and we moved higher and I said I wouldn't. Just seeing silver at 24 something, 24.20. I mean, I know that it's not going to break through there easily. So I may do a little trim right there, a little 5% out of everything, maybe 10%. But on the miners. Anyway, pretty clear. Gold and silver, that's what I think. Those are the reasons, etc. Let's look at the miners. The miners went up. Good stuff. This is something I did yesterday, telling you where I'd sold the first time, sold the second time, my average, and now here we go. It did what I thought it would do, well, 2 days ago, except yesterday I kind of gave up on that and sold. And I said I wouldn't sell if we go up here. But yeah, definitely we could get there tomorrow. Gold going to 2000, silver going to 24 something. You could expect, these are psychological numbers too, 2024. So you could at least expect a 2% run. Basically, the old highs over here on the GDX, that's a 2% move. GDXJ, look at that, closing at a high of day, even stronger. Bullish signal when the juniors are doing better than when the juniors are doing better than the seniors, and when silver's doing better than gold by a significant amount. 22.5% versus 1.5% is decent, and silver at 2.5 versus gold at 0.8. These are decent differences. So that's also bullish. And GDXJ, you can expect, 3%. Why not? If GDX is going to do 2 point something, 3% is nothing. Who knows? You could even make it a little higher. But no, 5% is maybe too much, but sometimes it surprises me. 3%. Let's see. That's what I think will happen. More of the same. Yesterday was a bit of a shakeout and they got me, but I only trimmed a little bit, and I'm well aware that it can continue. Otherwise I would have sold everything, which I've never done. So yeah, those are my thoughts, on the markets, on interest rates, on the dollar, and on commodities, especially gold and silver and the miners. Let me know what you think. Tomorrow, Friday, expect a lot with the banks, the dollar, and gold and silver and the miners. So looking forward to it. Absolutely loving the markets recently. So otherwise, good luck.